Inflation explained. How long will this last based on previous data? You are not dreaming it. The cost of everything is rising. The disparity between historical incomes, prices, and current year pricing is astounding. The fact that prices keep climbing is one of the strangest aspects of economic activity. The prices of products ranging from Oreos to PlayStation 5 consoles are continuously rising. For example, the typical price of a cinema ticket in 1980 was $2.89, but now the same cinema ticket will cost you around $9.16. You are not making this up. If it seems like your money isn't going as far as it once did, it is because it actually isn't. The root cause is inflation. Let's start the clock right away and begin with understanding what inflation really is. Inflation refers to an overall increase in the prices of goods and services in an economy due to a decrease in the purchasing power of money. Money becomes less valuable when the price rises. However, don't view inflation as just increasing cost for a single good or service. The widespread rise in prices within a certain sector or industry is referred to as inflation. According to BLS statistics, price appreciation during the previous 12 months was 7.5%, which was the fastest increase in the last 40 years. Increasing inflation has taken a toll on most of your favorite things, brands, products, and items. For instance, the monthly membership cost for the streaming service hiked up in January 2022. The basic Netflix package increased in price by $1 to $9.99, and the standard climbed from $1.50 to $15.49. The US BLS reported that prices at food stores rose by 6.5% in 2021. Although it might be discouraging to realize that your money is depreciating, the majority of economic experts view a moderate level of inflation as a positive indicator of a robust economy. A modest rate of inflation motivates you to invest or use your money right away instead of hiding it under your pillow and watching it lose value. If inflation gets to explode out of control and increases significantly, it could pose devastating pressure on an economy. Think about what Buffett said about inflation. Inflation swindles equity investors. Inflation swindles the bond investor too. It swindles the person who keeps their cash under their mattress. It swindles almost everybody. Your mind must have been bombarded with so many questions like, when will inflation end? When will prices decrease in 2022? Will it lead to a recession? What can we infer about the future from the rate of inflation today? So, hold on to your seatbelts. We're about to embark on an exploration of inflation and how long it will last. But before we move on, hit the bell icon with a hammer and throw a punch at the subscribe button. Make sure it gets gray. When will inflation decrease? Investors worldwide are pondering this question as the Federal Reserve prepares to raise interest rates. A 0.75 percentage point hike in interest rates was announced by the Fed in June, making it the biggest since 1994. Powell seems slowing Fed's hikes after 75 basis points next week. Surveyed economists see a big July increase, then a downshift. Rates may peak at 3.75% in February and then decline. Due to the impending increase in interest rates, some believe it may not start to cool off in pricing until 2023. With a few noticeable effects on pricing, the Fed has already increased interest rates several times this year. Prices have stayed persistently high despite the wave of rate increases this year. Prices continue to be unacceptably high, according to the CPI data for May. Basic categories like energy have increased by more than 30% since this time last year. This is mostly a result of increased gasoline prices. This month's CPI data showed that inflation increased by 9.1% in June. It has grown at its fastest rate since November 1981. The federal funds rate has been pushed up to its current level of 3.1% by the central bank. These rate rises are the largest since 1994, and there will likely be more. The cost of petrol is at its highest point in more than 10 years for Americans. Additionally, a few analysts and consumers worry that inflation might unintentionally push the nation into a recession. Inflation rose 9.1% in June, even more than expected as consumer pressures intensify. Data from the past may provide some useful information. The United States suffered through its longest period of elevated inflation in the 1970s. Large fluctuations in price were usual until the early 1980s, despite the fact that prices have been largely steady over the last 40 years. Due to restrictions imposed by the wars, prices increased quite rapidly during World Wars I and II, but they then started to decline after the restoration of peace. So, how long will it take us to get back to normal? Most people believe that it might take 2 recessions to return to a normal state. But Powell strongly disagrees with this. According to Powell, the economy is robust and the unemployment statistics don't resemble those from the 1970s at all. We are not experiencing the difficult times that existed in 1970. This means that returning to a stable position won't take as long. Inflation. Is it good or bad? The broad consensus is that both insufficient and excessive inflation is damaging to economies. Several analysts support a neutral inflation rate of 2 to 3% annually, which they consider to be low to moderate. We are all aware that customers should typically be on the lookout for inflation. But if you are a borrower, inflation can be advantageous for you. You must be wondering, how? Because your outstanding debts decline in value over time as inflation is adjusted. Anyone with large fixed-rate loans, like mortgages, benefits from increased inflation. The fact that such interest rates are fixed for the duration of the loan ensures that they won't fluctuate with inflation. On the other hand, inflation is unfavorable for savers because savings are affected by higher inflation, as their purchasing power is eroded. The world is experiencing high inflation. US inflation rate has almost quadrupled over the past 2 years, but in many other countries, it's risen even faster. The global rate of inflation is rising significantly. Over the past 2 years, the inflation rate in the US has practically quadrupled. However, it has increased much more quickly in many other nations. Israel is the nation with the fastest growing inflation in the previous 2 years. Israel saw yearly inflation rates under 2%. Israel's consumer price index started growing rapidly after a brief period of recession that was quite moderate. It has the highest inflation rate with a 25-fold rise. Alternatively, the inflation rate in Turkey reached a record high of 54.8% in 2022. Undoubtedly, these inflation stats are eye-opening, but there are more countries other than Israel and Turkey experiencing massive inflation growth as shown in the graph. Inflation and the Fed. Has the Fed responded in any way? A 2% inflation rate is considered optimal for job creation and price stability, according to the Federal Open Markets Committee. As long as inflation remains at this level, the FOMC can decrease interest rates during downturns, allowing borrowing to be more affordable and encouraging consumption. Consumers and companies should anticipate an inflation rate of 2% because the Fed is committed to taking the necessary steps to achieve the target of 2% inflation. The CPI inflation rate increased by 1.4% in 2020 and by 7% in 2021. The federal funds rate, which banks charge each other for overnight loans, is one of the key tools the Fed uses to manage inflation. However, the Fed has hiked interest rates 3 times in 2022. How does inflation affect things? The economy may be impacted by inflation in a number of ways. Exporters may profit if a country's currency weakens due to inflation, since this would make their products more cost-effective when represented in the currencies of other countries. However, this can affect importers by raising the cost of items created elsewhere. Rising inflation might boost expenditure because people would try to buy things as soon as possible before their prices continue to climb. And as I have told you earlier in this video, the saver will suffer from inflation. So, those who have saved money run the risk of having it lose some of its true worth, which would restrict their future options for saving or investing. Property investment and collectibles are examples of assets that often stay in line with inflation. Currently, inflation is at an all-time high. Why is this the case? The United States and the rest of the globe saw their largest known inflationary pressures ever since the early 1980s in 2022. You may be curious to know why inflation has risen to such a high level. Let me break some news to you. The sharp increase in worldwide prices is not due to a single factor, though. A number of factors combine to drive prices to elevated levels. Do you guys remember how we all survived COVID-19? Early in 2020, lockdowns occurred as a result of COVID-19. Aside from industrial shutdown and port congestion, other restrictions have severely impacted global supply networks. Governments also raised welfare payments to cope with the prevailing situation. As a result of the COVID recession, the economy is still struggling to return to pre-COVID levels. Inflation has been magnified by the Russian invasion of Ukraine, which has driven up food and energy costs further following the COVID-19 pandemic. How long will it take for inflation to fall? Many analysts predict that prices will likely stay flat for the rest of the year. Preston Caldwell predicts that price declines will not occur until 2023. This is what Caldwell has to say about inflation. While consensus has largely given up on the transitory story for inflation, we still think most of the sources of today's high inflation will abate and even unwind in impact over the next few years. This includes energy, autos, and other durables. Worries about inflation broadening out into the rest of the economy, including via high wage growth, look overblown. In the years between 2023 and 2025, Caldwell predicts that the rate of inflation will be an average of approximately 1.5%. Therefore, customers should anticipate that the year 2022 will record the strongest inflation, with prices predicted to decline by 2023. The U.S. economy is suffering from inflation as prices for everything from foodstuff to petrol have skyrocketed. Anyhow, it is anticipated that the Federal Reserve will switch to decreasing rates in 2023 to support a faltering economy, even though rates are still rising at the moment. One thing that is secretly killing everyone's budget is inflation. The prices of everything are on the rise, from groceries to gas. Considering the decreasing purchasing power of money, you lose an average of 2% to 3% of your buying power during a healthy year. But currently, inflation is steadily climbing over 8%, a figure we haven't seen in 40 years. Well, nobody can give you a specific answer to how long this inflation is expected to last. U.S. inflation is anticipated to last longer than the pandemic peak. Inflation is expected to continue to surpass the Fed's 2% annual objective through 2024. There may, however, be some relief from rising costs in the near future. According to Warren Buffett, when the inflation is high, the best thing you can do is be exceptionally good at something. Buffett emphasized that, in contrast to money, skills are inflation-proof. No matter how much the currency fluctuates, if you possess a skill that is in demand, you will always be above water. We will end this video here with Buffett's advice on how to deal with inflation. The best investment by far is anything that develops yourself, and it's not taxed at all. Whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. Thanks for watching the entire video. Don't forget to give this video a big thumbs up. Until the next video, peace out.